Good afternoon. Welcome to 2016 ACA Reporting, a primer for ALEs and small self-funded employers, presented by Filice Insurance. My name is Deborah Hyde, and I'm a Risk Counsel here at Filice. The goal of today's presentation is to provide you with the necessary information on reporting under the Affordable Care Act so that you'll better understand your company's obligations and so that you'll also feel comfortable with your ability to successfully meet these requirements. So today we're going to cover a broad look, a general overview of ACA reporting requirements, as well as applicable deadlines and penalties that might be at play. And then at that point, we're going to kind of divide the conversation, and we're going to first talk to applicable large employers specifically. And we're going to go over completing forms 1094 and 1095C, and then we're going to talk strategies for compliance and some employee communication tips. And then we're going to switch and focus on small employers that sponsor a self-funded health plan. And at that point, we will go over in detail forms 1094 and 1095B, and then we'll also talk strategies for compliance and go over some employee communication tips. During this presentation, it will likely be helpful to you to have either a copy of the printed slides for you to take notes on or the IRS forms themselves, because we have a lot of information to cover. Before we get started, though, I do want to take just a second to talk about the future of the Affordable Care Act and specifically the employer reporting obligations. So the results of the 2016 election make it pretty clear that the ACA will undergo some major changes in the year to come. So in 2017, we will undoubtedly see some changes to the Affordable Care Act, if not perhaps the repeal of the Affordable Care Act. So some provisions, they might stick around, others might be gone. We really don't know. So regardless of those projections that are being tossed about at this point, employers really should be prepared to comply with the law as it currently stands. I know the task of reporting might be daunting, and it's probably tempting to say, oh, I'm just going to put it off and not do it with the hope that maybe come January we won't have to do it. But it's really not worth the risk of incurring the very real and very avoidable penalties. So we'll continue to closely monitor any regulatory changes on our end, and if and when those come up, we'll certainly alert you to them. Okay, so let's get started with an overview of ACA reporting. So there are 3 reporting requirements under the Affordable Care Act, all 3 of which are illustrated in this chart here. The yellow column on the left illustrates aggregate value reporting, otherwise known as W-2 reporting. So this requirement currently applies only to employers who filed 250 or more forms W-2 in the prior calendar year. These employers must include the total dollar value of health coverage provided to an employee during the year. So it's provided on the W-2 purely for informational purposes to allow individuals to get a better idea of the cost of their health coverage and make more educated choices when it comes to purchasing health care in the future. It does not affect the taxation of the benefits that were provided during the year. It's purely informational. The other 2 columns in blue and then in pink on the right illustrate the 2 reporting requirements that we'll be focusing on today. And those are the requirements of reporting under Section 6055 and Section 6056 of the Affordable Care Act. The 2 reporting requirements apply to applicable large employers, and those are employers with 50 or more full-time employees in the prior year, and then also to providers of health coverage. And that includes both employers that sponsor a self-funded health plan and health insurance carriers. So Section 6056 reporting, that was the reporting in the blue column, in the pink column on the right, that applies to applicable large employers. And Section 6055 reporting, which was illustrated in the blue column on the previous chart, that applies to providers of coverage. So ALEs, or applicable large employers, must complete reporting no matter if their plan is self-funded or fully insured. If you're an ALE, you are subject to the reporting requirement. But small employers are only going to be required to complete reporting if they sponsor a self-funded or a level-funded health plan. If you're a small employer that sponsors a fully insured health plan, then you are not at all subject to these reporting requirements. I want to make note that an HRA, or a health reimbursement arrangement, does not trigger reporting requirements on its own. So it's not considered a self-funded health plan. The only time that you have to report HRA coverage is if you have employees who are enrolled in the HRA but not in your group health plan, which should be rare. The purpose of the reporting requirements really is twofold. So first, ALEs will use reporting to demonstrate to the IRS their compliance with the employer mandate, or otherwise known as the employer shared responsibility provisions under the Affordable Care Act. It's important to be aware that reporting isn't used to automatically assess penalties. So you will not incur any penalties under the employer mandate portion of the law based on reporting alone. The information that you submit to the IRS in these reports is going to be used to determine whether a penalty might potentially apply. So the penalties are not assessed purely based on these reports that you submit to the IRS, but these reports are used to help the IRS determine whether you've complied or if perhaps penalties might be assessable. The second purpose of the reporting requirement is to allow sponsors of self-funded health plans to use the reports to provide the IRS and employees with a proof of health coverage during the year. So self-funded employers, specifically small self-funded employers, are going to be using these reports to give the IRS and their employees their proof of health coverage throughout the year. So what is the time frame for completing reporting? So this year's deadlines are different than the deadlines that applied for 2015 reporting. So you'll remember in 2015, the IRS extended the reporting deadlines, which resulted in deadlines of March 31st and then either May 31st or June 30th. So those deadlines got pushed back for 2015. It was really kind of a surprise, but also a welcome surprise from the IRS because it allowed employers to have a little bit more time to get their reporting together. However, for 2016, there will be no extension provided. So instead, we're going to go back to those original deadlines. So employee statements must be provided by January 31st of 2017. And then your submissions to the IRS must be made by February 28, 2017, or by March 31st, 2017, if you're filing those statements with the IRS electronically. So those deadlines are going to come around a lot more quickly in 2017 than they did in 2016. So they're pushed up quite a bit, and we need to be prepared to meet those. Filing penalties are also much different this year. So employers will face a penalty of $260 per delinquent or incorrect form, up to a total of $3.2 million. This means that any late form or any incorrect form or any form that's never provided will subject the employer to these penalties. Unlike 2015 reporting, there is no good faith effort exemption this year. So in 2015, employers were given kind of a pass on some of these penalties. Basically, if employers got their reports in on time, they wouldn't be, and if, of course, if the employers made a good faith effort to get the information reported correctly, they would not be subject to these filing penalties. But for 2016 reporting, we no longer have that good faith effort exemption to the penalty. So you have to be prepared not only to get the report submitted on time, but you also have to be prepared and confident that the information that you are reporting is accurate. Okay, at this point then, we're going to break off and we're going to focus entirely on the details that are relevant to applicable large employers. So this is applicable large employers, both those that are fully insured and those that are self-funded. Small employers, you can tune out of this portion and then rejoin us when we turn our attention to the details that pertain to you specifically. My guess is we'll probably be focusing on small employer requirements at about the 35 or 40-minute mark. So maybe you want to jump back in and catch back up once we get to that point in time. Otherwise, we're just going to go ahead and jump right in to talk about the details that pertain to applicable large employers. So let's start off with a reminder about who exactly is an applicable large employer. So an ALE is an employer that employed an average of 50 or more full-time employees in the prior calendar year. So that includes non-full-time employee hours, which are otherwise referred to as full-time equivalent employees. Also keep in mind that if you are part of a controlled group, in other words, if you have multiple employer entities that are under common control or common ownership, all of the employees in those employer entities have to be counted aggregately. And if there are 50 or more full-time employees amongst all of the entities, then each employer entity in that group is considered an ALE on its own. Employers that cross or reach that 50 full-time employee threshold mid-year will likely be considered an ALE the following year, not in the present year. So if you just hit that 50 mark in 2016, you are likely not considered an applicable large employer for 2016. You might be for 2017, but not for 2016. So for this year, we're looking at employee counts from the prior year, from 2015, to make that determination. Okay, what then are the specific obligations when it comes to ALE reporting? There are two IRS forms that you'll need to complete, Form 1094 and 1095C. The Form 1095C, this is the most difficult of the forms. It's the most complex of the forms to create. And a Form 1095C must be completed for each full-time employee who was employed during the calendar year 2016. So it doesn't matter how long that employee was with you for the year or if they terminated mid-year. If they were your full-time employee during calendar year 2016, you will need to complete a Form 1095C for that individual. The Form 1095C reports offers of coverage that were or were not made to that employee. And ALEs that sponsor a self-funded health plan will have to go one step further and will have to also use the form to report which month of the year the employee and any dependents were covered under the plan. So a copy of this form is going to go to each employee as the employee statement. So that's that January 31st, 2017 deadline that we previously looked at. And then the originals are going to go to the IRS. So that's that IRS submission we looked at with a deadline of February 28th, 2017 or March 31st, 2017 if you file electronically. Form 1094C is the other form that you're responsible for, and this one is much easier to complete. You are only completing one Form 1095C per employer, so it's a lot easier already. It reports summary information about coverage that you made available to your employees during the year, very high-level information, and this form is submitted directly to the IRS along with those Forms 1095C. So again, you're looking at a February 28th or March 31st, 2017 deadline. Let's look in more detail then at each of these forms, starting with Form 1095C, which is shown here. As you can see, there are three different parts or sections to this form. So Part 1, Part 2, and Part 3. As I mentioned earlier, this is the form that's definitely more complex and definitely more difficult to complete. So you're completing one of these for each of your full-time employees during the year. All right, let's look at the specifics of the form. So Part 1 of Form 1095-C is fairly straightforward, fairly simple. On lines 1 through 6, you're simply going to include the identifying information of the particular full-time employee, so their name, their address, that sort of thing. And then on lines 7 through 13 of Part 1, you are going to include identifying information of the employer, of you. So Part 1, pretty simple. Part 2 is where things take a turn, get a little bit more difficult. On line 14 of Part 2, every single month must be filled out with the code to indicate whether or not coverage was offered to the employee. On line 15, you need to indicate when coverage was offered, how much would it have cost the employee to elect that coverage. And on line 16, you need to fill out every month with a specific safe harbor code. That might not make any sense to you at all right now, and we're going to dive deeper into this section in just a few moments, but I want to give you just a high-level overview of what Part 2 contains. And then finally, Part 3. This is the part that's required only for employers that sponsor a self-funded or a level-funded health plan. If you are an employer that offers a fully insured health plan, you are not completing Part 3. But if you offer a self-funded or a level-funded plan, you do need to complete Part 3 by listing the employee if he or she was covered under the self-funded health plan, and you also need to include any covered dependents, so any children or spouse that was also covered under the plan. You need to list them in Part 3 as well. Okay, so let's look in more detail at Part 2. But actually, before we do that, I want to make one last comment about Part 3. So for those self-funded health plans, you have to also report individuals who are participating or who are covered under your plan via COBRA. So if you've got a former employee who is participating in your plan during the 2016 year through COBRA, you need to also complete a form and complete Part 3 for that employee. So you must report on your COBRA participants. Okay. Moving along to look at Part 2 in deeper detail. And we're going to start with line 14. So line 14, remember, it requires employers to use specific codes provided by the IRS to indicate whether coverage was offered to the employee in a particular month. Now, there are a ton of codes to choose from, which are listed here. They run from code A all the way through 1K. If you were reporting last year, you might notice that there are some new codes. So codes 1J and 1K are newly added for 2016. So it does look a little bit different than last year. So let's go through some of the codes and talk about when you might use these codes for your own purposes, for your own reporting. So the most common codes that you'll be using are going to be either 1A, 1E, or 1H. And I have those highlighted here. So let's start with 1H. 1H says no offer of coverage. You'll use code 1H on line 14 for any month where you didn't offer coverage to the employee. So for whatever reason, you didn't offer coverage. Maybe they weren't yet your employee, so you didn't hire them until May. You still have to account for January through April. Well, you're going to use code 1H to indicate no offer of coverage was made. If they terminated mid-year, you're going to finish out the year using code 1H to indicate no offer of coverage. So for any month where coverage was not available to that employee, you will use code 1H. On the flip side, for a month where you did offer coverage and make coverage available to the employee, not about whether or not they chose to take that coverage, but if you offered it, made it available, you will use likely code 1A or 1E. Those are the most common. So code 1A represents an offer of coverage that you made to the employee, and it cost the employee no more than $93 per month. So the lowest cost plan you offered the employee would have cost the employee no more than $93 per month to elect self-only coverage. You also offered coverage to a spouse and dependents. So 1A is somewhat common if you offer coverage at a rate of no more than $93 a month. If your coverage costs the employee more than that, then you might be using code 1E, which represents an offer of coverage made to the employee and coverage also offered to dependents and spouse. So those are the two most common codes used to represent an offer of coverage. I do want to point out a couple others though. So I mentioned that codes 1J and 1K are new this year. So what are those codes all about? Those codes would be used when you make an offer of coverage to the spouse that is conditional. So a conditional offer of coverage to the spouse means that there has to be some other condition before the spouse is able to enroll in your health plan. A really common example of that is a condition where an employer says the spouse can be eligible to participate in our group health plan only if he or she does not have access to coverage through their own employer. So that would be a conditional offer. I don't think it's a super common eligibility definition that's out there. I think it's perhaps becoming more common. So if you have a conditional offer to a spouse, you'll want to be looking at code 1J or 1K. Excuse me. Also, 1G, let's take a look at 1G really quickly. It's a little bit unusual. It says coverage offered to an individual who is not an employee or not a full-time employee for any month of the year and who enrolls in self-funded coverage. So this is going to be for employers who have a self-funded health plan. If you need to report on someone who was not an employee at all during the year or was not a full-time employee at all during the year, but they were still enrolled in your coverage, you'll use 1G here. And a really great example of that is if you've got a COBRA participant, so an inactive employee, a terminated employee who was not at all employed by you during 2016 but was enrolled in your health plan via COBRA, you have to use code 1G to indicate that. Okay, a lot of codes I know, but hopefully that was helpful to give you an idea of the codes that are most commonly used, although there are a lot more to choose from that may apply to you and your plan. Line 15 of Part 2 is pretty simple. So first of all, you only complete line 15 where you enter code 1B, C, D, E, J, or K for a month on line 14. So if you didn't enter any of those codes for a month on line 14, then you get to skip line 15 altogether for that month. If you did enter one of those codes, then what you have to do is you need to record the monthly employee contribution for self-only coverage under the lowest cost minimum value plan. So what is that exactly? You will have to figure out, of all the options that you made available to the employee, so all the medical plans that you made available for the employee to select from, what is the lowest cost plan out of all of those? And what would that lowest cost plan cost the employee per month if the employee elected self-only coverage? So that's the value, the dollar figure that you're going to record on line 15 for a particular month. Please keep in mind that it doesn't matter whether or not the employee actually elected coverage or elected that coverage. Maybe they waived coverage, maybe they chose to enroll in the higher cost plan, maybe they decided to enroll their dependents. That's irrelevant for purposes of line 15. You're just looking at the self-only cost under the lowest cost plan. Okay, finally we have line 16 of Part 2, and we're back to looking at these codes provided by the IRS. So you'll see we have codes 2A through 2I, and what you're doing here is if a code fits, you're going to use it, okay? And these codes really allow you as the employer the opportunity to provide the IRS with some additional information about the coverage that was or wasn't offered, or what exactly was going on that month. You get a chance to sort of justify your offer or your lack of an offer. So let's look at some of these and go over the specifics of when you might use them. So first of all, you have code 2A, employee not employed during any day of the month. Seems pretty simple, right? So if you have a month of 2016 where the employee was not your employee for any day of that month, either they weren't yet hired or they had terminated their employment, you're going to use code 2A on line 16. Code 2B will be used for any month where the employee was not a full-time employee. So that might be because the employee was full-time but transitioned to a part-time position mid-year, or maybe they came on as part-time and transitioned to full-time at some point mid-year. It may also be that the employee goes on kind of an inactive status, so they're still your employee, but they're inactive because they're taking a leave of absence, and therefore they're not getting that offer of coverage. You might use 2B in that case as well. Code 2C is very simple, very straightforward. It says employee enrolled in coverage offered. So if the employee elected coverage under your plan, use code 2C for that month. Again, it doesn't have to be that they enrolled in the lowest cost self-only option, but if they are covered under your plan for that month, you're going to use code 2C. End of story. Code 2D, employee in a limited non-assessment period. This code should be used for the months or months where the employee is in his or her waiting period, right? So remember, waiting periods for coverage cannot exceed 90 days. But during this time, during that waiting period, there is no offer of coverage happening, and that's because the employee is in a limited non-assessment period. So you would use code 2D. Code 2E says multi-employer interim relief. That I'm going to talk about a little bit later on, so we're going to come back to that one. Codes 2F, G, and H all relate to the affordability of the coverage that you offer. So these codes, F, G, and H, will be used where you offered coverage to the employee that was affordable based on one of these three methods, but the employee declined coverage or waived coverage. So in that case, for waivers, you will use 2F, 2G, or 2H to indicate that you offered them affordable coverage. Now, of course, if you didn't offer them affordable coverage, if you offered them coverage but it was not affordable based on one of these three methods, you would not use code 2F, G, or H. So really, the only time a code wouldn't fit is if you offered unaffordable coverage and the employee declined it. And then, of course, we can see 2I is a code that is reserved for this year, so it's no longer an option for 2016. All right, let's look then excuse me, at some common scenarios with Form 1095-C. And the first common scenario is going to be COBRA coverage. So with Part 2, with all those codes, how do you record COBRA coverage? How do you reflect that in this form? So there are two different ways. The first way is the way that you're going to report it for terminated employees. So if you have an employee whose employment terminates, this is how you're going to do it. You will use Part 2 to reflect no offer of coverage being made. So very simple. Once that employment terminates, you will report as 1H, no offer of coverage, and code 2A, employee not employed during the month. That's how you report terminated employees. It doesn't matter if the employee was offered COBRA or not, or whether they elected COBRA or not. You're going to indicate it using 1H and 2A. Now, on the other hand, offers of COBRA coverage that are made to active employees are recorded differently. So if an active employee is offered COBRA, perhaps the employee went from full-time employment and dropped down to part-time employment and lost their eligibility. Part 2 does need to reflect an offer of coverage made if you offer COBRA, okay? So you do have to treat it differently. So you do need to record that as an offer of coverage. So for example, if you offer COBRA coverage to the employee and the spouse and dependents, you will use code 1E to indicate that, and if the employee enrolls in that coverage, you will use code 2C on line 16 to indicate that they enrolled. So you have to treat that offer of COBRA coverage just like any other offer of coverage and report it appropriately. What about multi-employer or union plans? Employers must complete reporting for full-time union employees. That always causes some confusion, but the fact is if you've got full-time union employees, you need to complete these reports for them. But there is a specific way that you're going to do it. So if you're an employer that contributes to a union-sponsored plan on behalf of a union employee, you will treat that contribution as your offer of coverage in a sense, okay? So if every month you're contributing to that union-sponsored plan on behalf of the employee and on behalf of the hours that he or she works for you, that's kind of like your offer of coverage. So you're not required to know whether the employee is enrolled in that union plan, the cost of coverage under the union plan, or the type of coverage offered. You don't have to know any of those details. If you're contributing to the plan, you get to use a code scenario like this. You're going to use code 1H on line 14 and code 2E, multi-employer interim relief, on line 16. And that says to the IRS that you were contributing to a union-sponsored plan on behalf of that employee for the month. So you'll use the combination 1H, 2E. And that's how you report for union employees. All right, let's transition then to the easier form, rather. It's Form 1094C. So there are 4 parts to this form. I'm only showing page 1 here, but trust me, it's a fairly simple form. It doesn't get too complicated. On part 1 of the form, you are going to enter on lines 1 through 16, employer information. Line 18 should indicate the total number of Forms 1095C that you're submitting with this form. And line 19, each employer does need to submit an authoritative transmittal form 1094C, so you will be checking the box unless you're filing multiple Form 1094Cs, which would be very odd. So if you're just submitting one single 1094C, for your employer entity, for your company, then you do need to check the box that it is the authoritative transmittal. Part 2, line 20 should indicate the total number of Forms 1095C submitted by this employer. So in most cases, it's going to be the same figure that you entered on line 19. Line 21 should indicate whether or not you're part of an aggregated ALE group or a controlled group where there are multiple employer entities under common control. And then line 22, it's always confusing. I hate line 22, but it's entirely optional even if one of these 3 options apply. So keep that in mind. It's optional to check a box on line 22. Box A is the qualifying offer method. Box C is the Section 4980H transition relief, and box D is 98% offer method. So if one of those 3 boxes applies to you and you want to, you can check the box. If you don't want to, you don't have to. Nothing bad is going to happen. Part 3. Here we have more monthly data collection, but it's pretty simple data collection. In column A, you are going to indicate for each month whether or not the employer offered coverage to at least 95% of its full-time employees. So all you're going to do is you're going to say for each month, did I offer coverage to at least 95% of our full-time employee population? Yes or no? Column B, you have to indicate the full-time employee count per month. So full-time employees only in column B. And in column C, you're going to record the total employee count per month, including non-full-time employees. So if you've got part-time employees out there, your count in column C will be higher than in column B. Column D, you will check the months during which you are a member of an aggregated group or a controlled group. If you're not a member of a controlled group, so if you don't have multiple employer entities under common control or ownership, you leave column D entirely blank. On the other hand, if there are multiple employer entities that are under common ownership, then you will be checking the boxes in column D for the months where that aggregated group or controlled group existed. And then finally, column E. Column E, so if you checked box C on line 22 previously, which relates to transitional relief, you need to complete column E. And you will do that by entering either an A or a B. And whether you enter A or B depends on what type of transition relief you're claiming. If you did not check box C on line 22, you will leave column E entirely blank. The types of transition relief that are available to employers this year is it's pretty minimal as compared to last year for 2015 reporting. A lot of those transition relief options went away, so we're left with fewer. But if you think that one of those two applies to you and you confirm that it does, then you certainly want to claim it, and you do that here in column E. Finally, part 4 of this form. Part 4 is completed only by employers that are part of an aggregated ALE group or that controlled group. So if you were not part of a controlled group, then you are not completing part 4. You're done. You're leaving it blank. If you were a part of a controlled group or are part of a controlled group, you need to simply include the legal name of the other employer entities within your group along with the EIN. So pretty simple stuff with part 4. Okay, strategies for compliance. Let's talk then about some strategies now that we've looked at the forms and we've been able to kind of evaluate how difficult it might be for us to complete them. Outsourcing can be a really fantastic option, especially in a couple of different scenarios. So you might want to outsource, you might want to turn to a vendor or a third party to help you complete your filing if you're filing 250 or more forms. The reason for that is employers who are filing 250 or more forms are required to file electronically, which is a very complex process, very difficult. You'll want to have a vendor there to help you out. If you have an unstable workforce, you have high turnover, you have a large variable hour employee population, it might be tricky for you to figure out who you need to complete these reports on and who you don't need to complete the reports on. And again, that's where a vendor might be very useful and helpful to you. And then if you've got lots of different employee contribution rates, especially if you have age-rated plans, it might, again, be helpful to outsource just so that you can have a vendor help you figure out what the cost to each employee would be and what costs you need to record on the forms. If you do choose to go with a vendor, they're going to want to engage one immediately, definitely prior to December. The availability of vendors shrinks the closer we get to the new year, and the prices also tend to go up the closer we get. Do you consider the amount of data that you're going to have to provide to the vendor versus what the vendor can provide? You want to make sure that you're prepared to do some work because, again, you can't just say, okay, vendor, you do everything. You have to provide some data, and you have to be able to do that relatively easily. And then do ask about electronic filing and delivery of employee statements. Some vendors won't e-file your forms. Some will, but will charge a higher fee. And some vendors, maybe they don't distribute the employee statements to the employees by January 31st. These are all details that you'll want to know up front so that you're aware of what your responsibility is going to be. And then finally, employee communication. So it's a really important aspect of reporting that might get overlooked simply because employees are going to want to know what's going on. They're aware that these forms are out there. They're aware that they're going to receive them. Once they get them, they're going to have questions. It's something that you should consider communicating ahead of time so that your employees just simply have a heads up and know what's going on and know what to expect. So you might want to consider letting them know that full-time employees are going to be receiving a Form 1095-C whether or not they were covered under the group plan. You might want to let them know that employees and their dependents, if they were covered under a fully insured medical plan, will receive a separate form, Form 1095-B, from the carrier. If there's a self-funded plan, then you might want to let them know that the Form 1095-C they're receiving will also serve as their proof of coverage. So that's important to let them know. The form might potentially be required by a tax preparer when completing 2016 income tax returns, but it should not be filed with the IRS. This form the employee receives is for their records only. It should stay with them. It should not get submitted to the IRS. You also might want to consider including the Form 1095, that should say 1095-C, sorry about that. Consider including the Form 1095-C employee statement with the Form W-2 because you have the same timeline. They're both due no later than January 31st, 2017. So you might want to just stick them both together along with a letter that explains what this 1095-C form is all about and make it really easy. If you have questions about employee communication, we do have some template letters available that you can use and that you can customize to make sure that your employees are aware of what exactly these forms are all about. Okay, that was a ton of information that we kind of sped through. I thank you for sticking with me through all of that. Please feel free to reach out to me via email if you have any questions now or if you have any questions later on as you start going through the process. I know that was a lot to take in, especially if this is your first year with reporting. So if you want to talk through some different scenarios that are unique to your employee population, or you want to try to go through the codes in more detail or any particular part of the form, please feel free to reach out to me. I'm always happy to go over that with you. At this time, let's switch gears now and let's focus on small employers that sponsor a self-funded health plan. So small employers, hope you're back with us now because we're going to cover the details that apply specifically to you. Remember, this is only small employers, so no more ALEs, no more applicable large employers, and it's only a small employer that offers a self-funded or a level-funded health plan. There should be no small employers that offer a fully insured health plan listening right now, unless you're super curious. All right. Your responsibility under the Affordable Care Act reporting requirements is to complete two forms, Form 1094-B and Form 1095-B. So Form 1095-B will be completed for each employee that was covered under the plan during the calendar year. You'll also include on Form 1095-B any covered dependents. And this is the form that is used to show proof of medical coverage. So it's proof to the IRS that this employee and his or her dependents had an acceptable level of health coverage throughout the year. A copy is going to go to each employee as the employee statement. So that's that January 31st, 2017 deadline. And then the originals are going to go to the IRS, and that's going to be a submission deadline of either February 28th, 2017 or March 31st, 2017 if you file those forms electronically. Form 1094-B, this one's much simpler. It's super, super easy. It's one form is filled out per employer, so you're only filling out one form 1094-B. And it reports very basic summary information about the coverage that you provided during the year. This form is submitted directly to the IRS along with Forms 1095B, so you're looking at a deadline for this form of either February 28, 2017 or March 31st, 2017 if you file electronically. Let's take a look then at these forms. Let's start with Form 1095B. This is the form that's going to be completed for each employee that was covered under the plan during the year. And there are 4 parts, as you can see here. I do want to quickly point out that you're not just filling this out for employees who were covered, you're also filling out if you have COBRA participants, so former employees who are now participating under your plan via COBRA. So Part 1, you are simply filling out the responsible individual's information, and the responsible individual is the employee or the former employee who is now covered under COBRA. For origin of health coverage, you are selecting B, employer-sponsored coverage. That's the type of coverage that you're reporting. Part 3 is employer information. So I should mention, if we go back and look at Part 2, if you can see there, this would only be filled out by the insurance carrier. If it was a carrier, you're not a carrier, you're not an insurance carrier, so you're not filling out Part 2. Part 3 is your employer information, and then Part 4 is the part of the form where you are going to list each covered individual. So that's going to be the employee, any covered spouse, any covered dependents, and again, this might not even be an active employee. It might be a former employee who's participating via COBRA. On Part 4, you should only include a birth date if the Social Security number or tax identification number is not available. So use a social if it's available. If not, you can rely on a birth date. Again, this is the form that the individual is going to receive that shows proof of coverage for them that, yes, I did have an acceptable level of health coverage for all months of the year. Also on Part 4, you're going to actually check the boxes. You're going to check the boxes for the month that the individuals were actually enrolled in coverage. So it's really, really pretty simple. You should be able to get this information via your bills from the carrier. Oh, actually, sorry. I'm sorry, I got off track. You don't have a carrier, so you should be able to get this information from your enrollment information. I apologize, I misspoke. So if you're keeping good enrollment records, you should be able to go back and figure out who was enrolled for every single month of the calendar year 2016. Form 1094B really could not be any easier. I mean, half of it is blank, and that white space is an excellent sign because it means it's a super simple form to fill out. This is the form that you are filling out once, and then you're done. So one Form 1094B. You're going to complete lines 1 through 8 with employer information, and then on line 9, you are going to indicate the total number of Forms 1095B to be submitted along with this transmittal Form 1094B. So really could not be any easier. Okay, let's then think about strategies for compliance and how should you prepare to complete these forms. They're very simple forms, as I said, and you should generally be filing no more than 50, maybe in some cases more than 50, but since you're a small employer, you should really be looking at right about 50 as your maximum number of forms to be filing. So it's really a very manageable task to handle in-house. There's really no need for you to panic and seek outside help and pay a lot of money to have a vendor come in and help you, because you can probably do it yourself. So think about, the pros and cons of outsourcing. If you utilize a benefits administration platform or HRIS system that is set up to complete the reporting for you, so if it's all the data is within the system and all you have to do is press a button, then you probably do just want to go ahead and rely on that system to complete the reporting for you. But otherwise, it's really not worth the expense or the time to engage a brand new vendor and implement a system just to handle this reporting piece for you. It's really not worth it. Manual completion of the forms is probably the way to go. Again, the number of forms should be minimal, and the data is pretty simple. You just have to know who was enrolled and when were they enrolled. And again, that should be something that you can easily gain from the enrollment records that you keep. At Filice, we do offer our clients a pretty great solution. It's basically an Excel workbook where you enter the data and then you can upload it to our system, and it will auto-populate each of the individual forms for you. So you still have to enter all the data yourself, but it saves you the time of having to complete each individual form. So that's an option that we offer. Also think about how you're going to be submitting these forms to the IRS. So you can submit hard copies because you'll be filing fewer than 250 forms. So you have the option of submitting hard copies and just mailing them to the IRS. Again, I think that's a great way to go because you're not mailing a whole lot of forms. If you choose to mail them in, you are looking at a February 28th deadline. If you choose to e-file with the IRS, you have until March 31st to get those done. But e-filing is a pretty complicated process. Vendors tend to handle it pretty well, but if you're not using a vendor, if you're doing it on your own with that manual completion of the forms, I would suggest just going ahead and planning on hard copy submissions rather than electronic filing. It's a very complicated process, probably not worth it for the number of forms you're submitting. In terms of employee communication, it is a good idea for you to communicate to your employees about the forms that they might be receiving. So you'll want to let them know that any employee and their dependents, of course, who were covered under the company's self-funded medical plan will be receiving a Form 1095-B no later than January 31st. And you'll want to let them know that the form serves as their proof of medical coverage for the year. The form might be required when completing 2016 income tax returns. So if they've got a tax preparer, the tax preparer might ask for the form, or if they're using tax preparation software, the software might ask about and reference the 1095-B. But it's not a form that should ever be filed with the taxes to the IRS. It's for the employee's own records to show that they had health coverage throughout the year. Employees who are covered under a fully insured medical plan, so maybe under a spouse's plan, they'll receive a 1095-B from the carrier, not from you. So that might be good information to pass along too, just so that no employee panics if they don't receive one from you. You might want to consider including the Form 1095-B statement with the Form W-2 that you send out. It's the same deadline, January 31st, 2017. You might want to just stick them both in the same envelope along with a letter explaining Form 1095-B and make it super simple on yourself. If you are interested or would like, we do have template letters that we've drafted and created that you can modify and use to communicate these points and these details to your employees. They were really helpful to clients last year because they could be modified really quickly, and they were really super simple to let the employees know, hey, what's this new tax form all about? So if you're interested in getting a copy of that template letter, let me know. I'd be happy to share that with you. And that's all I have for you. I know we covered a lot of information, so if you do have any questions now, or if you have questions that come up later on as you get going in this process, please feel free to reach out to me. I'm happy to talk through the forms with you. I'm happy to answer any specific questions you might have that are unique to your employee population. Please let me know if you have any questions about the reporting process. And I thank you for joining our discussion on small employer reporting under the ACA.